There's been tremendous change and innovation in payments in recent years, including the introduction of the first new payment rails in 50 years. And that's going to be the topic of this session, the implications of instant payments, including things around the current status of instant payments, synergies and overlaps with other innovations, fraud and risk, and so forth. I'm Reed Lutanen, Executive Director of the U.S. Faster Payments Council, a nonprofit that brings together all the different segments of the payments ecosystem to drive the United States to safe, easy to use, ubiquitous, faster payments. I'm joined by two great speakers to help us talk through these things. So I'm going to kick it over to you, Peter.
Thank you, Reed. Hello, everyone. Peter Chapling. I'm an independent consultant in the space, PTAP Advisory. I am a board member of the U.S. Faster Payments Council. I was a steering committee member of the Secure Payments Task Force promulgated by the Fed over a number of years. I currently sit on the work group for scams information sharing under the Boston Fed. So spent a lot of time on in and around instant payments. My education on instant payments dates back to 2006, 7, 8, when I was serving several of the largest financial institutions in the UK during their launch of their instant payments capability, not too cryptically called faster payments.
Hi, everyone. I'm Dan Anthony, so I'm the CIO for FedNow, and Reed stole my thunder a little bit by saying it is the first new federal payments rail in 50 years, which it is. But it also delivers payments instantly between bank accounts, which is tremendously important to the United States. So I serve the overall technology function in FedNow, as well as I'm responsible for building and maintaining the platform.
Yeah, and that's actually a great segue because I wanted to kind of set the stage for our listeners or our audience as to what instant payments are, right? Because it tends to be like, oh, well, I think I have instant payments. I do things like I pay with a card, right? And that feels to a certain extent instant, right? You present the card, you get to walk away with your bananas or whatever it is you're buying at the grocery store. And then you don't really pay attention to the fact that it actually could take several days before that transaction actually settles and the money moves from your bank account to the merchant settlement account on the other side, right? So, or ACH, right? We're all familiar with ACH, probably mostly through direct deposit of payroll, but lots of other uses for ACH. Great system, reaches all the different endpoints in the United States in terms of DDAs and accounts, but it takes at least minutes, if not hours or even days, again, for the money to move from one account to another. So the introduction of instant payments where truly the money flows from one account to the other within seconds, right? 5 seconds, I think is kind of what we talk about, probably even less than that usually, is a major difference between what we're talking about here and what we've had in the past. So that's important to keep in mind. Some other common features of instant payment systems are that the transactions are all credit push transactions, which means there's no ability to debit an account through FedNow or through the RTP network. Also, they typically enable to replace that debit what we call a request for payment or a request to pay. So the ability to send a message from one participant to another to say, hey, you owe me $100 for your cell phone bill or whatever it might be. And then the ability for the sender of that payment to say, yep, I do, and then to send the payment. Also, like I mentioned, transactions are settled instantly within a few seconds. And another key feature of both RTP and FedNow is that both are irrevocable when it comes to these transactions. So once the transactions are transmitted through the network and settled to the receiving bank account, there's no way to charge them back or to dispute them the way you can through card or ACH.
Yeah, I think that's right, Reed. And there are the use cases that I think that enables are quite different. So it's very hard, for example, to buy your groceries with ACH because of that delay. And at the same time, there are these peer-to-peer type products that are out there that act in a very similar manner to instant payments. But I think the difference here is we're talking about instant payments between bank accounts. And so the money is available and usable to you outside the context of any closed loop ecosystems around you. So I think the impact and the benefit to citizens and businesses around the US is going to be enormous.
Yeah, I think that when we think about instant payments, we always have to talk about two words that almost no consumer ever thinks about in a payment, and that's clearing and settlement, right? If my kids were to send me money via one of the popular P2P apps of PayPal or Venmo, I get a text message instantly. It says, "Oh, Catherine sent you $25." But reality is that money is all sitting in a bank account held by that provider, and they just made a ledger entry to move it from one thing to the other. And all of us who use these platforms have experienced this concept of clearing and settlement when we went to move money out of those platforms, because generally you would use it ACH to do that, and it would take a couple of days. More recently, they're enabled by instant payments, and for a fee, you can get the money instantly. But where this shows up in efficiencies in the economy, anybody who's closed on a house knows that today you have to use a wire to close on a house. Why? Because the money must be cleared and settled in order for that transaction to complete. And so for all of the payments that we're doing today, where they're not cleared and settled instantly, that means that there's some level of risk and someone is absorbing that risk that the payment may not settle. So the opportunities for, we think about all of the brands that we use. I order ahead at Starbucks. I use Amazon Prime to get stuff delivered today. I go to Netflix and I pick a movie that I want to watch and I watch it instantly. We don't have that in the banking universe. And one of the reasons we don't have that in the banking universe is there's no way to move money instantly. This changes that.
And that's actually a really good segue, Peter, because I think we keep saying like, this is great. This does all this wonderful stuff, but I bet you most people who are watching this are like, well, I haven't experienced this. You guys said these Rails are live, but I'm still feeling it. I just opened an account for my daughter and we put some money in there and she pulled up the app. She says, well, hey, what's the deal here? You said you gave me the money, but it's not here. So where are we with RTP?
Well, so we're going to let Dan talk about FedNow in a minute, but the instant payments capabilities in the United States, we have two rails. One of them is a platform called RTP, made available by the clearinghouse back in 2017. They have perhaps 400 financial institutions on that platform, and have for built up that number of banks over the course of 5 years or so. And I think they just announced they've crossed over 1 billion transactions since the inception of the network. Now, to put that in perspective, they have instant payments in Brazil, a system called Pix. They do 1 billion transactions a month. And so we are still in the very nascent stages of growing these networks. One of the other characteristics of banks that are joining these networks here in the United States, most of them are joining in a mode that's called receive only. They can receive a payment, but they can't send a payment. And so those customers, Reed, that you talked about that said, hey, how come I don't see this? It's because while their bank is on the network, their bank has not created a product to offer to them to enable them to experience this kind of payment. So I think, the good news is FedNow, the introduction of FedNow, I don't want to steal Dan's thunder, but the introduction of FedNow has turned instant payments for financial institutions from a question of should I do this or shouldn't I to when will I do this? So Dan, I'll kick it over to you. Talk about the development of the FedNow ecosystem.
Yeah, no, I think you're 100% right. So we launched in July of 2023. We recently hit 400 participating financial institutions on the system plus processors. So that's been a tremendous growth rate in a relatively short period of time. And that covers roughly 25% of eligible DDAs. Additionally, we've heard that RTP has also increased their subscriber account basis. And so what we're really seeing is that the rising tide lifts all ships, and instant payments are really ubiquitous access is kind of getting closer and closer as collectively the nation moves forward. Now, 400 financial institutions, there's north of 9,000 in the US, so we've got a long ways to go. And as that network effect builds, I think that's when you're going to see tremendous uptick in usage of the system and really delivering that value and innovation to consumers and citizens and to businesses, which more or less parallels what we've seen internationally when other systems have launched.
Yeah, and I would add that as you think about leveraging or potentially using these services, there's no need to wait for your current, financial institution to get on board. First of all, if they're not, you should be talking to them and saying, hey, this is something that you need to be offering for me. And I would guess that many participants on this call, your financial institutions probably are already offering this ability to send and receive. And so you can leverage this today, even if it's not 100% reach today. So there's a way that you can partner with your financial institution to leverage what does exist in terms of network capabilities today. So I think that's something to think about. And of course, Dan, the audience here is the Cloud Security Alliance. So we should definitely talk about the fact that not only is FedNow here and it's the first new rail from the Federal Reserve in 50 years, is also was built in the cloud, right? So let's hear about that. What are the advantages? Why did you guys do it that way?
Yeah, that's a really good question. So, first of all, I want to preface this by saying um, traditional on-prem is not a bad thing. We launched our last payments rail at the Fed 50 years ago, and I assure you, no one was on the cloud in 1972. And for 50 years, we've been providing reliable, resilient ACH processing that the nation can rely on. As we looked forward, and given some of the unique requirements of a real-time, always-on processing system, the cloud offered us a number of opportunities to achieve different things, such as best practice security, taking advantage of both cloud capabilities and our own resilience, reliability, scalability, just optionality and things that are very, very hard to deliver in a traditional data center or where your options are different. The other thing I'd add here is the cloud presents opportunities through tooling, automation, and the ability to do this dynamic provisioning to move with a speed that it's much harder to move at in a traditional data center. So, for example, procuring new hardware has a supply chain life cycle. There's a lead time to get it there, and we were born in the pandemic, and where the supply chain issues were very well documented. So that, plus the ability for us to rapidly make technical pivots as we were moving through the process, is something that I think financial institutions and providers can look at in terms of how they can leverage a cloud to optimize their business and pursue new challenges.
Yeah, absolutely. Another thing I think a lot about when it comes to payments is, a lot of industries, they're dealing with stuff that people just like intrinsically are wanting, right? So it's something that people want to buy or something that people want to experience. Payments is really something that goes along with all that other stuff, right? So nobody's like conducting a payment because they appreciate the way it sounds or the way it tastes or they want to look at it. They're making that payment because they have something else going on, right? Some other relationship that's related to another person or another entity, and there's a transaction or an exchange of value going both ways, and the payment is a way to reflect that transfer of value, right? So Peter, when you're thinking about things like that and you're sort of connecting the dots, what are some other things that are happening right now in tech that are sort of related to this advent of instant payments that we should be sort of putting together in our mental picture?
Yeah, and I go back to the opening comments where we talked about the experiences that consumers are getting today and the way that those experiences are setting the experience they want to have with their financial institution. The as we move to one of the things that Dan talked about was this concept of 1972, built on-premise infrastructure, IBM mainframe based. It was all batch, meaning we gathered up payments during the day. We hit a button at the end of the day, payments went in. Banks operated 9 to 5, not on the banking holidays. That's when you could move money. That's not consistent with modern experiences. And so as we move to a world where you will be able to make a payment instantly at any time, think of the raft of apps that you use and the ability to hit a button in an app and say, pay now, and it actually happens. It moves from your bank account to the car dealer's bank account or to the bank account where you're buying the bed off of the local marketplace or whatever it is, right? And so how do you enable all of those things? Some buzzwords that you might hear about in the industry are open banking is one. API banking is also thrown out there. Banking as a service is thrown out there. Open banking is a term we've kind of borrowed from other places in the world, over in Europe and the UK. They have legislated open banking where a central authority identifies the APIs that will be available and how those APIs will be published by financial institutions. Here in the US, As with our faster payment schemes, we are taking a much more market-driven approach. We're allowing market participants to publish whatever APIs they want, and then we kind of call that open banking. But for the consumer, what that means is that when you want to use banking services, you're now being exposed to consume those banking services in apps that are not delivered by your bank, right? As we move forward, this open banking is all driven by this API economy where financial institutions, rather than consuming APIs that are given to them by providers, they become the provider. They are publishing an API that other people can use to take advantage of the services that the bank has to offer on behalf of the bank's customers. And again, that all of those capabilities, they want the same always on, highly scalable, very flexible microservices architecture, all the things we like to talk about in the cloud universe. But they all need to be secured. A bank doesn't want just anybody making an API request against Reed's account. So I think that we're moving in that direction. And when we talk about why will customers want this and when will customers want this, I have a question that Reed's going to get sick of. He's going to roll his eyes when I say this because he hears me say it all the time. But do you want your money now or do you want your money later? Everyone will answer that question the same way, right? They want their money now. But they're so used, we coach them over 50 years that you can't move money in or out of the bank account if it's not during banking hours. And some of the payments might take 2 or 3 days. As consumers and businesses begin to experience this real-time movement of money that really meets their obligations instantly, they're going to want more of it.
Yeah, and I think that's really true of businesses as well, Peter. So you can very much see a world where payments become competitive advantage. So, imagine competing in the talent market where you may choose to make being able to pay your employees overnight or at the end of their shift instead of waiting 2 weeks. Like that, for the folks who are on that cash flow constrained, living paycheck to paycheck, like that's a material differentiator in the market. You could see reorchestration of supply chain. I literally was talking to a CIO yesterday for whom managing their payments is a critical business activity, and this is in the fitness industry. Because there's such a high volume of payments, and depending on what product they're using, they have a relatively high failure rate or error rate. And so the ability to take access to that money immediately, manage their cash flow in real time has, really significant transformative value for the business.
Yeah, for sure. And I would just piggy on to this a little bit that, yeah, if you say, do you want your money sooner or do you want it later? Everybody would say sooner, for sure. But I think if you flip it around and sort of think about it from the corporate treasurer perspective on accounts payable, do you want to pay sooner or do you want to pay later? Right. So it not only allows you to receive money faster potentially, but also allows you to delay when you have to send the payment out if it can be settled instantly versus multiple days through some slower type of payment, right? So that can be an advantage when you're talking about managing your own balance sheet from a corporate perspective.
Yeah. But the phrase that I've heard along those lines that I really love is precision payments, being able to make the payment exactly when I want to make the payment.
Yeah, and being able to set up rules for that. So you don't need a person there necessarily to push the button all the time, right? And I agree with you on the payroll thing. I think just in general, we're going to see way more flexibility and adaptability when it comes to managing labor, right? There are ways that businesses are going to compete for labor are going to change, and the amount that they pay is not going to be the primary driver. It certainly, well, maybe it'll be the primary, but it won't be the only one like it has been in the past, right? So you're right, like the ability to pay somebody in real time, or the ability to pay somebody even an installment during their shift we hear about now, where it's, maybe you got a break that's scheduled in the middle of your shift and you want to get some of your pay that you worked for or already. That's going to be possible. And that's the kind of thing that we can do through these networks. There's actually a fast food place right down the street from my house that one of the biggest posters in the window is a recruitment poster. And it talks about, hey, if you work here, we'll pay you at the end of every shift. Within, like that's like something that they're using, like visible out there on the street, that they're like using because it's an effective way of bringing people in the door to work for them.
Yeah. And I think, this kind of leans into the financial health, financial inclusion opportunities that exist with instant payments. One of the reasons that, today, how that's happening today, by the way, how does it happen today? what happens with cash at the end of the day. I'm going to pay you $100 and give you $100 bill. It might happen with decoupled debit cards where there's a card and money value goes onto that card. But those capabilities kind of take those workers and say there's no need for you to have a bank account. So we're kind of encouraging people not to operate within the banking system. And so by taking all these payments and being able to make them instant bank account to bank account, we're creating a platform that will hopefully begin to continue to expand the base of consumers in the United States that are responsibly using banking services.
Yeah, and I think that's important not only because it's just good for us to sort of have as many people banked as possible, just as a sort of like from a starting point, but also it enables those folks who today are maybe having to operate with cash, like you just said, who they can't transact online, right? I would guess that a lot of folks who are listening to this would be interested in, people being able to use their funds to make purchases through the web or through an app and things like that. And if you've got cash in your pocket, that's great, but you can't use that to buy something from Amazon or from Walmart.com or to pay your Netflix subscription, right? So the ability to be banked sort of unlocks a lot of ability to participate in today's economy.
Yeah, and I think it also offers opportunities for those who are not proximate to a bank to participate in the digital economy. So, if you don't live within 50 miles of a bank because you're out in the country, but you can move your money electronically instantly, still within your bank account, and have access to those services delivered through a platform like that, the opportunities to be able to participate more fully in the economy are sort of, revolutionary.
Yeah. And Peter, you mentioned sort of safely operating within the banking system. I mean, that's critical, right? Of course, we're here talking to security folks, people who are thinking forward thinking about payment security and other forms of security and cybersecurity. So I think it's probably important for us to sort of touch on, fraud and risk, because I think that's always going to be top of mind, especially when we're talking about something new when it comes to new and moving money. Those are the kind of things that make people a little bit nervous, right? So let's talk through that a little bit. When you're talking about moving funds instantly and irrevocably, what are some of the things that folks here should be keeping in mind when it comes to fraud and risk?
Yeah, so bad guys want their money faster too. Hey, they're more than happy to have their money faster. So there's one characteristic of these payments, you brought it up earlier, Reed, that people tend to zero in on, and that's this concept of irrevocability. And that's very important from a bank clearing and settlement risk management perspective for financial institutions and their customers to know that these payments are complete, obligations are complete on both sides. But in theory, what it means is that once the money moved, it's like cash. It's like I had a $100 bill and I gave it to Dan and Dan walked away. And he, of course, is an unsavory character. And I didn't get whatever it was that he promised. But the bottom line is, and I'm going to steal a phrase from Gail Hillebrand, one of our co-board members at the U.S. Faster Payments Council, which is irrevocable does not mean irremediable. The fact that a given payment is irrevocable does not mean that you can't work with the customer and the financial institutions on both sides to figure out how to make things right again in the case where things went wrong. Now, we have spent several decades since the advent of card focusing on, actually since the advent of any kind of electronic payment, focusing fraud efforts on unauthorized transactions, trying to track down those transactions where we don't think it's the rightful owner of the account who's actually trying to move the money. One of the things that instant payments has done is it's introduced this concept that has become called authorized push payment fraud, where the consumer or the business is the actual owner of the account and they're giving an instruction to the financial institution to move the money, but the money is being moved to some unsavory character, not Dan, because we know he's a savory character. But in any case, so we have, fraud fighters kind of have a shift here, which is we now need to begin looking at authorized payments, not just unauthorized payments. As businesses and consumers, we need to know that we need to treat these electronic payments like cash. If you wouldn't give this person $100, then don't send them an instant payments. And now we writ large, the financial industry, we want businesses and consumers to believe that electronic payments are safe, and we're doing everything we can to make them safe. But there also needs to be some responsibility on the people who are initiating these payments to know why they're doing it.
So if I can build on Peter's comments there, and thanks for allowing me to be a savory character for the rest of the conversation. From a FedNow perspective, the participating financial institution is the front line of fraud protection. But we do provide right now fundamental fraud protection, such as transaction limits, disallow lists, the ability to report fraud. We're adding more this year, and I expect we'll continue to add more over time. But I think the key point Peter articulated here is for those offering instant payments, it really behooves you to go and educate your end user and your end consumer, because a large number of attacks are account takeovers, or in many cases malware that users inadvertently put on their phone. The Pix pirate malware is known to intercept payments generated from a mobile device and create them. And that only gets on your phone because you did something that lets you get it there. So educate the users to take some of the same security precautions that you and I, as working professionals, take for granted in our working life, in their personal life too. There's also impersonation scams are growing, as you're seeing in the card industry, and so educating people to be on the lookout for that. And so capabilities like payee verification are things like we're looking to add with some of the capabilities coming into FedNow over time. So education is an enormously powerful tool for people offering payment services.
Yeah, absolutely. Just kind of piling on a little bit. One thing that I think quite a bit about, in contrast to other types of fraud that are maybe more familiar, like card fraud or check fraud, the type of fraud we're talking about here. So card fraud, you've got a transaction that's fundamentally between a cardholder and a merchant, neither of whom is the bad guy, right? The bad guy is the one who's walking away with the iPads or whatever it might be that they're going to then sell. And then that's how they're going to get their money from this fraud, right? Whereas here, the bad guy is often the receiver account holder. So the person that the account that the money is actually going into. So you've got a bit of a different dynamic there. So instead of having, like, you've actually got bad actors in the banking system who you have to be aware of in monitoring and hopefully stopping. So that's one thing.
And it would be so easy if the receiver account was the actual bad guy, but that's almost never the case, right? There's a whole, in this ecosystem, there's a whole infrastructure of mule accounts that allows bad guys to have the money land somewhere and then move it around before they finally exfiltrate it. And by the way, they're using instant available cloud native services in order to make all this stuff work, right? We are sitting here talking about FedNow and RTP instant payments, but the exfiltration of bad guy money occurs over any way that you can imagine that money gets moved. P2P platforms, crypto, checks, you name it, they're moving money that way.
Great.
The veneer of civilization is thin.
Yeah, I will say, just a quick shameless plug, there's a lot of resources on fasterpaymentscouncil.org in the Knowledge Center specifically to fraud. We just put out a paper a couple weeks ago on fraud mitigation tactics for instant payments. So it's a great piece. And then podcast just launched on February 8th, the podcast with our work group leaders from that fraud work group. So Off the Rails from the U.S. Faster Payments Council. If you're a podcast listener, check that out. Dan, I did want to steer us back to cloud a little bit if we have a few minutes more to talk about that, because I think you talked about before that we're in the cloud with FedNow. There are solutions that are in the cloud like that, but then there are other aspects maybe that require a physical server and a data center somewhere. So there's intersections between on premises and cloud. So talk us through that, and how does that play out, and what are the considerations?
Yeah, so it's a really good question. This notion of operating in a mixed environment is nothing new. Hybrid cloud is the terminology for that. But even without having a private cloud available to you, plenty of organizations operate some core workloads on premise and some in the cloud. They need to protect critical data, data sovereignty issues in some regions. So that this is a common challenge that businesses encounter. So FedNow is the first cloud payments rail, and it came into this ecosystem of pre-existing cloud products. So we very much operate in that mixed use environment, some on-prem, some in the cloud. Importantly, to access the Federal Reserve payments rails, you come over the channel, which is FedLine. And there are different access methods for that, but they require some degree of physical infrastructure, whether it's a direct connection or it's a physical token for a VPN or a VPN device to create a secure channel into the system. We want to have a unified customer experience. And so, it makes sense to have the customer come into FedNow over the same channel they use to handle their ACH payments or their wire payments. To sort of manage that ease of consumption of the different services as well as a consistent experience. In terms of how to manage that hybrid sort of environment, within your application portfolio, there's a wide variety of options available to you. Every cloud provider has their options for high-speed connectivity, secure and dedicated, or otherwise. So, whether it's AWS Direct Connect or Azure Express Route Direct or Google Dedicated Interconnect, they all have these options that can go up to gigabits of capacity just for your traffic. And in many cases, there's also the ability to bring physical infrastructure on premise to help bridge that in a more fully integrated way into the cloud. It's really just a matter of figuring out, what are your workloads that need to go where, what is the latency sensitivity and tolerance between them, and then optimize processes around that. As well as figuring out how you can replicate the kind of redundancy and resilience in the cloud so that you don't end up having a single point of failure within your on-premise systems. Now, for us, we settle against the master account so that we can guarantee that money is instantly cleared and settled in real time. That implies then that we have to connect to some of the same systems which support our existing applications and existing products, wire cache, ACH. Wire check ACH. And so, that interoperability is a very real thing that we need to think about, and maintaining sufficiently resilient and high performing infrastructure and connectivity to allow that to operate.
Well, I'm glad there are people who understand all this stuff like you do, because we'd be in trouble if I was having to be in charge here. Peter, do you have any thoughts there before we
The only thing I was going to add, actually, this is going to kick it back to Dan a little bit. But one of the things when we talk about cloud and scalability and things like that, when frequently we'll talk about FedNow and people think of it as one product and they think of the Federal Reserve as being one entity. But the way it's operated, there are 12 Federal Reserve banks, and they all have to interoperate in real time because the sending bank might have their settlement account at one Fed bank and the receiving might have one at another. So in this case, I would think that for instant payments, cloud really helps that kind of distributed architecture that's necessary for FedNow.
Yeah, that's exactly right. Yes, we do have 12 districts. All our payment services are offered under the Federal Reserve Financial Services. And so we have the ability to work together on the different services there that support the nation as a whole. But yeah, you're 100% spot on. The cloud, and that was one of the key reasons, gives us different options to distribute, to replicate, parallel processing, all the things that allow us to operate at scale, and with that redundancy and resilience that make sure that we are always on in the event of an incident. That's really enabled by cloud in a way that is much more challenging if I've got a finite set of capacity and a finite set of locations to deploy physically.
Peter, we talked about how we have these two great new rails that we just launched, the FedNow rail last year, the RTP rail a few years before that. They're going to provide this instant settlement, but we also said, hey, they're not quite 100% ubiquitous yet. They've got the reach of about 400 FIs out of 9,000 or so in the United States. So when you look toward the future, what do you see as sort of the final success? When we say mission accomplished, where are we going to be?
So Dan mentioned, we have 9,500 regulated financial institutions in the United States. We don't need to get to all 10,000 in order to have practical ubiquity. I think you get 98% of the demand deposit accounts covered with the top 2,000 or so financial institutions. So both the Fed and the clearinghouse are doing a great job adding more financial institutions to the networks. And so I think more banks on the networks is a good thing. I think that today, 15% or so of the banks who join the network join in a way that allows them to send a payment. And as a user of banking services, yes, I want to receive my money more quickly. But if I'm truly going to have precision payments, I need to be able to control when I send my money as well. And so pay attention to the number of financial institutions that join the network in a send persona, in a send participation type. And then the last thing would be look for applications. Pay attention to when your financial institutions or other service providers begin to offer this ability to get money instantly or send money instantly. You can actually see this a little bit today. The P2P services, some of the gambling applications allow what they refer to as instant payouts, where you hit the button and the money will literally be in your bank account within seconds. That takes advantage of the FedNow and the RTP application. So when's that going to happen? Don't think it's going to happen in 2024. I think by the end of 2025 into 26, we're going to begin to see that critical mass of financial institutions on the network. And then in the next couple of years after that, we'll begin to see the send capabilities, request for payment capabilities, and certainly by the end of the decade, I believe instant payments will just be part of our regular banking fabric.
Yeah, I 100% spot on about sending. From my perspective, to articulate that nice and simply, when every American citizen and every American business can make and receive payments instantly. And a lot of that is, yes, it does include sending, but I think closing that last mile to the customer, that, putting it on their mobile device, putting it as a plugin into their ERP, et cetera. And so I think that's really where you're going to see some of the innovation in the fintech, in the banking as a service space as driving some of that innovation for banks and credit unions to make that connectivity.
Yeah. I'm just going to steal a line from Peter Tapling that he likes to say a lot. And we'll know we've succeeded when we just call them payments, not faster payments or instant payments, right? That's when it becomes the normal thing. This has been great. How about final thoughts from both of you I'll take the final stab at final thoughts, but Peter, what are your final thoughts here before we let our audience go?
Yeah, so we are speaking with the Cloud Security Alliance. Certainly, payments are something that we want to be safe. So, as you are, these capabilities, these new application capabilities, have a greater chance that they're going to be implemented in a cloud-native way than not. And so, making sure that these capabilities are protected in all the ways that we think about security protection, encrypted in rest, encrypted in flight, but also being able to have this infrastructure that allows parties to communicate with each other with this mindset that we're actually moving money 24/7 by 365 and being cognizant of that.
Dan?
Yeah, from the security perspective, 100% is, cloud offers opportunities to think about security differently, but also the same. You have to protect your data, you have to protect your assets, you have to protect the users of those things. How you think about them and how you implement them is different. And you have different optionalities depending on the nature of that data and the nature of the business process. The real value for cloud, I think, in that perspective is the cloud has what's called the shared responsibility model. So the cloud provider secures the infrastructure and the underlying platforms that we run our applications on. And that's pretty time consuming. The things that we would typically do on a data center around deploying patches to infrastructure, maintaining low-level protocols and securities, vulnerabilities of some of the tech that make up cloud services. I don't have to worry about that. It's taken care of by the vendor. I have to worry about it, of course, but I can trust that the vendor manages that as part of their service levels. I can then focus on the higher level security activities, the things that directly protect my data, my customers, my interactions. And so from delivering a truly secure end-to-end experience, I think the cloud gives us a bunch of different opportunities at a lower cost of doing business, because you don't have to maintain all the personnel to do that. That lets us focus on higher value activities.
Great. I would just add that this is something that as a security professional, it's coming, right? So this is going to be part of the way payments are handled in this country in the very near future. I think Peter said by the end of this decade. I think that's you know, that I consider that to be a medium term, I guess, but certainly not after most of you are retired. So I think getting smart on this, building out a network of people you can talk to and who understand this stuff and who can help you kind of make sure your organization is looking after this aspect of it from a security perspective, but also from, you know, potential business win perspective is critical. So finding those people, organizations, obviously the Faster Payments Council is a good place to start, fasterpaymentscouncil.org. Lots of information there that you can check out and read up on what's this current state of thinking in this space, and lots of people you could get to know who can help you sort of navigate this space. So no shortage of people who want to help organizations that are interested in instant payments get their minds around it and build a strategy. So, you know, make friends and influence people, I guess. Well, hey, guys, I think this has been great. Thank you both for joining us, and thanks to the CSA for having us.
Yeah, thanks for the opportunity. Always love to talk about FedNow.
Thanks, Reed. Thanks, Dan. And I want to go on record. Dan's a savory character.
Yay! Thank you, Peter. I feel validated.